Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to look at our commodity uh, bull market. We'll look at the ratios, market conditions, and see how it's doing for a commodity bull market. I'll give you my financial opinion here. And we'll dive right in. We'll start with the dollar and work our way lower and show you a bunch of different ratios. The DXY is strengthening. It's a relative strength indicator, and it is strengthening in the short term. Could we do a double top and then head lower? Very much possible. That resistance line is this resistance line right here at the top here. We have broken this big long-term resistance line to the upside. We've been moving higher, but I do think that eventually, in a commodities bull market with high inflation, rising interest rates, that we could potentially head lower at some point, much like the 1970s, much like the mid-2000s. I do think that will come with a commodity bull market, and we'll see a weakening DXY. The 10-year yield, we've broken this long-term downtrend line. We are at a resistance between the white line here, which we've hit multiple times through history. We zoom in, we've got lots of buying pressure in this vicinity here. Oops. We've got lots of buying pressure in this section there, which is telling me, I should say not buying pressures, it'd be selling pressure for bonds. Yields are going higher. And those yields going higher tells me that a recession is not feared by the banks. People are not running to bonds. They're actually firming up here to make a move higher where people are selling bonds. They're more afraid of inflation than a crash in the system. So, and we're starting to see some of these banks, hedge funds buy real estate. The actions that they have and what I'm seeing in the debt markets, it's not telling me that we have a crash in the short term. It's telling me that they're more worried about inflation than they are about any sort of problem from a recession or a deflationary crash. And this is the bond market here, Treasury bonds, 20-year, and what I see there is a breakdown to the downside here for bonds in an ascending or a rising type wedge. That is bearish. It wants to go lower. There's going to be selling pressure. This one here is also a bearish rising wedge that broke to the downside. And then they have another one, it breaks to the downside. So by looking at the charts of bonds, 20-year bonds, looking at yields, I don't think that we're going to have a recession. If we were going to have this blowout deflationary recession, the banks would be running to bonds, but they're not running to bonds. They're selling these things off. And on a long-term perspective, this is a weak buying pressure in here. So it makes me think that they are not worried about a recession and that it's going to head lower. And if it heads lower, they're worried about inflation. Inflation. When we look at the CRB index, this has pulled on back. This is our first, I think, wave. We'll probably come back and then we'll create a second large wave. So where we are is like this right here. That's the first wave. This is just a bigger fractal. And then we're going to get a huge third wave out of it. And then the last fifth. So I think that first wave is done. We are pulling back. We're in the middle between a first and third wave. We've broken the downtrend line, which means we could go at any time to the upside here. The downtrend is broken. Looking at gold, gold is right on support. So that's looking a little bit better. And we've got more buying pressure than selling pressure on the right-hand side there. Looking at silver, broken downtrend line, that looks good to go higher. We're bouncing off long-term support. Platinum, moving higher here in the short term. We got to break out of this other pattern here to the upside. That's what we want next. XAU to gold ratio has broken its downtrend. We could see mining companies outperform gold itself. There's a couple of favorite sectors within that I like, mainly silver miners. Coming down to crude oil. Crude oil was higher last trading session, but we're on this long-term support level. There's the long-term support. We have been manipulating the price with strategic petroleum reserve releases. Could this break down to the downside? It very well could. We could pull down a little bit. Maybe we go back down to 75 at the lowest. We do have support right where it's at. So we'll see if that holds. If it doesn't hold, we have strong support at the 75 range. It's going to be sticky all through this section below it if they can push it lower. I know that they're actively trying to push this lower before the elections. So they're going to dump and flood the market with a bunch of oil from the Strategic Petroleum Reserve. They've already said that. This is nothing more than a great buying opportunity before they stop releasing from the Strategic Petroleum Reserve. And I think the whole market will tighten up in terms of supply demand. Natural gas has been really volatile. Big picture view here. We've broken out of this consolidation range to the upside. Is this an accumulation cylinder? It very well could be. You zoom in here. We hit our head on this resistance line, came back, hit our head on it again, came back. Are we going to break higher here, or is this going to relax and come back? Short-term trading patterns, if you were to look at these candlesticks in here, makes me think that we could go higher. We've got good buying pressure here, smaller selling pressure, the potentials to the upside. But we do have a little bit of demand weakness between summer and winter in the fall. Sometimes it pulls back. So it's really a toss in the air here. We've got the Freeport LNG facility coming back online in October. That's going to help put pressures on a higher natural gas price. So I'm not selling anything. I'm holding on. If we do get a pullback, I would be a buyer of the pullback myself. Coming on down and looking at some of these, we'll go to uranium here. The uranium's been pretty much moving sideways here. It's trying to put in a bottom here. I think this will eventually turn and go higher at any second here. So that looks good. Scrolling down to the CRB to S&P 500, we're getting into ratios now. We have broken this pattern to the downside, and we're kind of just chilling here. Where I think the S&P 500 is getting a little bit of a move higher. It's kind of a relief rally, and commodities are relaxing for a little bit with a little bit weaker 10-year yield. So this is the pullback in commodities. This is the bear trap, I think, in overall stock market. And then I think this will reverse at some point and head on higher. Commodities, favoring commodities. Platinum to gold. Platinum's been outperforming gold here. It looks like it's ready to try to put an attack on gold, which means that platinum should outperform gold, hopefully in the short term here. Platinum to palladium, that one's also incredibly low. Palladium's been quite strong with current market conditions. I do think eventually that platinum will outperform palladium. Platinum will substitute palladium, and we're going to get more buying pressure in platinum, less buying pressure in palladium over time. Platinum's been outperforming silver. We've broken out to the upside here. We're starting to lay down some fat candlesticks. In this tip here, we've got far greater up days than down days. That is the recipe that the buyers are in control and that we could see an outperformance of platinum in relationship to silver. Again, this is just putting the odds in our favor. Doesn't mean that that has to happen. I know a lot of people, they look at ratios. What ratios do is they tell you market conditions. They are a function of what the market conditions are. And I think in an inflationary time that we've seen in history, that platinum's outperformed silver in the beginning of commodity bull markets. And this looks like it's true, and it's setting up to do that. Gold to silver ratio. Gold is still outperforming silver. We're at a 90 ratio. That's incredibly cheap for silver. And it looks like we're starting to get our first type of move lower where silver is going to outperform gold. So that's good. Palladium to silver. Palladium is still putting in a pattern here, and it is outperforming silver at this time. It is at an expensive level where silver's cheap and palladium's expensive historically. Dow Jones to gold. Dow Jones has been moving higher in the short term. Stocks have been rallying with the lower yields, and I think that will be a temporary move, and it'll be a bear trap for stock buyers. So I think eventually this will turn and go lower over time, given the market conditions of a commodity bull market, high inflation, higher interest rates. Gold to oil ratio, it's basically doing a retest. What it did is it broke out to the downside. It's doing a retest here. Now, are we going to see this contract back down? I think so. When they're done with the Strategic Petroleum Reserve releases, the markets are still incredibly tight. We are in an energy crisis. I think that this ratio will continue to compress below 10. That's what we saw historically all through here in the late 2000s. I think we're going to see something like that again. But in the short term, we could still soften up a little bit. There's lots of fears of recession and all these other things. They're dumping the Strategic Petroleum Reserve. We could still go higher in the short term. Copper to gold ratio. We had a nice, good move here, and this looks like it wants to move higher. That's good. That means higher interest rates. And it also means that the people in the market think that the economy is strengthening. So when this ratio goes lower, people are fearful. When this ratio goes up, people have more confidence in the economy. This here at this bottom, it looks like we want to go higher with that nice big bullish engulfing, where copper is going to outperform gold, and that people are less scared of a recession and are more, basically they're preparing themselves for an economic recovery. And that ratio typically coincides with higher 10-year rates. Long-term downtrend or trend line here, we're breaking that to the upside for uranium. Uranium to silver ratio looks good. So uranium should outperform silver. Looking at this next ratio, uranium to the S&P 500. We've had a little bit of a pullback here. I think uranium is going to outperform, move higher in the short term. So uranium is going to outperform the S&P 500. It is very cheap for uranium. Uranium's cheap in relationship to gold. I do think that this was going to outperform and move to the upside at some point. So uranium's going to outperform gold. Uranium will outperform crude oil at some point here. It looks like it's lining up to take a run at it right now. And then uranium to copper. That one's also lining up with higher lows coming up, like it wants to break that resistance line where uranium will outperform copper. Basically, what uranium is doing is lining up absolutely everything to try to outperform all of the other investments and sectors. And the Baltic Dry Index to gold still chopping sideways. The S&P 500, this has been moving higher in the short term. Will this continue? I don't know if it will with increasing interest rates. I think this is more of a bear market rally. I think the same thing for U.S. Composite Index. Is this move done going up? Tough to say. I'm not going to try to time this short term, but overall, I do think that this will roll over and head lower at some point. The Home Builders Index still moving higher, broken downtrend. I think this will continue to move higher. I think we have to build a lot more new homes. Could this come back down here? It very well could before moving higher. But long term, I do think that we're going to build more new homes. I don't think that the demographic is that demand is fulfilled yet. Looking at lumber, lumber is still going lower. Some people say, oh, well, lumber is a leading indicator. It is and it isn't. It depends on if you have stable demand and stable supply. If demand and supply are going all over the place, which I think is happening with our system, it's difficult to say what this is telling us because we've been whipsawing back and forth between these supply demand ever since COVID. So we're just coming down to, I think, is a more normal level. Nickel moving sideways. This guy's been moving sideways for a while. JP Morgan's got their hands on this. Palladium priced in dollars. Moving sideways. We've broken this uptrend line to the downside. This is a return move, and I think we are going to head lower in palladium. Looking at cocoa futures, We're still in this gigantic pattern here, still consolidating. Wheat, we are still pulling on back. I do think that this will eventually pull up and then probably pull back again. We've got soybeans getting some selling pressure. Again, I'm not in any of these soft commodities, but we're at an entirely higher level here. Corn also pulling on back from its highs. It looks like it wants to pull up a little bit here in the short term. We've got copper firming up. That looks good. Big long-term view. We've pulled back quite a bit off its highs here. So there's that. Coming on down to, there's aluminum down here. Aluminum's been putting in a base here, just moving sideways. And it's trying to find support right where it's at. So that's what I've got for today, guys. I mean, platinum still looks very good. That'd be the one that I would be looking at precious metals wise and for kind of a long-term investment. Everything else, you know, we're seeing some good signs of downtrend line breaks. So that's good. And the market conditions are still positive for a commodities bull market. We're just relaxing in the short term. I don't think that there's going to be some recessionary blowout in the short term. At least the 10-year yields aren't showing me that, and the bond market isn't showing me that. So I still think that everything is good to go. We're just in a little bit of a slowdown. And then eventually, when the recessionary fears pass and the Strategic Petroleum Reserve stops releasing oil, we're going to see a big move in commodities again. If you like the content, give me a thumbs up, subscribe to the channel, subscribe to the website, platinum membership below in the description link if you want to. And we'll catch you next time. This is Finding Value.